What's going on, everybody? It's your boy Marcelino. Welcome back to my channel. Today we're going to be talking about trends. Okay, how do you determine a trend? What's the importance of a trend, and why do everybody say the trend is your friend? Okay, guys, so you'll see that a lot of people will use indicators to determine a trend. That is a easy way, but because moving averages, which is the most commonly used indicator to determine a trend, is a bit lagging, so it lags a bit. What that means is that you consistently behind what is actually happening right now within price action. So I am here to present you guys with how to actually determine a trend, and what you guys are actually going to have to do if you don't understand what I'm talking about with higher highs and higher lows. Check out right now, there's going to be a something at the top of the screen to take you guys to my market structure video. Okay, so you're gonna have to watch my market structure video to actually see what exactly is happening or how market structure works. Okay, so without further ado, let's get into it. Trend trading. Why do they say the trend is your friend? When you determine the trend is your friend, and what is the importance basically of the trend. So when you determine what the trend is, that means that you now have your direction in which you are trading in, and you should not be trading against that direction. Why? Because you have more chances of winning when you are actually trading with a trend. It's easier. It's like, let's say for instance, you were salmon in this is a funny example, but you were salmon in a lake or in a river. The salmon's continuously swimming upstream to get to a certain like level. However, you don't want to be that type of trader. You don't want to be the salmon of trading. You want to be trading with the trend. So you just want to be flowing with the river downwards, or you want to be moving upwards. You just want to be flowing with the stream of water. Okay, so that it's easier for you to actually make money, instead of, because if you're going to be going against that river, you're going to see that it's easier for you to get stopped out. It's going to be easier for you to actually lose money. Or even when you're trading against the trend, you're going to see it moves way slower than what it does when you are moving with the trend. Okay, so how do you determine a trend? With price action, you are going to have to use market structure to determine a trend, guys. So what you are going to have to do for an uptrend, guys, you are going to have to see price moving up, creating a area in the market where price has now created a point where it's going to turn around to then create another area in the market. Okay, so this is, you don't really necessarily know what is happening at this point, because price has just made certain areas in the market. Now what you can determine is that if this area right here, this low right here is higher than this low, you can start anticipating a uptrend to form, because now price has not broken this low. Price has made a higher low. So you guys need to watch the market structure video if you guys don't know what I'm talking about, or you don't know the terminology of which I'm talking about. So we now have this point in the market, we have a higher low in the market, and this is when a trend is confirmed, guys. When this higher high right here, when this is made and we take out this area in the market, so you can see that this point is higher than this point, and that's why it's called a higher high. When this higher high is made and it's taken out this specific point in the market, that is when a trend is then confirmed, and now you are only looking for buys in this market. And that's basically going to simplify your trading, guys. It's going to take out you trying to look for buys on this day, you trying to look for sells as well. So the 1 hour passes, especially as day traders, 1 hour passes, I'm looking for buys. Then next 30 minutes, I'm looking for sells. Next 15 minutes, I'm looking for buys again. And this really takes away all of those stresses. So then when you come back to your journal and you look at your trades, you're going to see for that specific day, you really traded in one direction for that specific pair, or you traded in one direction for multiple pairs. Because if you trade in, like, let's say for instance, the dollar correlated pairs, you're going to be trading in one direction more likely than not. Okay, guys, so this is now when a trend is confirmed, and now you're only looking for buys, you're looking for pullbacks, for break and retest, you're looking for anything that does this, but you're always looking for continuations, guys. Once this leg happens. I like to call it the third leg. So this is the way I look at it. Leg one, let me do this. This is the way I look at it. This is leg one, okay? This would be leg two. So leg two would be the pullback, and then leg three would be the confirmation of you actually seeing the new higher high formed. And when the higher high forms, that's when you are now in an uptrend and you can now start looking for buys. Okay, guys. So that's your uptrend. Let's look at the downtrend now. So just remember, once leg three happens and it's confirmed that a higher high is made, you are now expecting a higher low to be formed. And as long as we stay above the last higher low, as it's explained in market structure, you can continuously look for buys, guys. So now we're looking at the downtrend, guys. You have a point in the market where price has created this area. You don't know that it's confirmed a downtrend as of yet. You don't know anything. However, what you do know is that you can see weak rejections in this area. You can see bearish engulfing candles right here starting to occur. So what you can anticipate now is that price is kind of slowing down and there's more potential for it to go down. However, it's not confirmed. You don't know that you're looking for sells as of yet. So what you can anticipate is that this low is lower than this low. Okay, so this could be a potential lower high. So you can see that it's lower, and then when you do form this right here, when you do form the third leg as mentioned here, you are now in a confirmed bear market and you are only looking for sells, guys. So you can see we form this, what we can now call a low because we know it's a low. We form this lower high because this lower high is lower than this previous high, okay? And then we formed a new lower low, and that is now when the trend is confirmed and you are only looking for sells, guys. This is the importance of a trend, and this is why everybody will always tell you the trend is your friend, because you want to be, you don't want to be trading these pullbacks per se. Now if you are trading from a higher time frame perspective, you could be saying, okay, I might be able to trade this, but I would say whether you trade in weekly, monthly, uh daily, 4H, doesn't matter. Whether you trade in lower time frames, you don't want to be trading against the trend. When you identify the trend, what you can start to do is just start waiting for these pullbacks. So for the number two leg in the market or the number four leg in the market, and then anticipate that price is going to continue, because that's the basics of the market and that's the way trends are made. And what you will start to see is, let me draw this. If you are trading with moving averages, you'll start to see that, let's say price was in a consolidation or price was coming down, right? This is the moving average. You're going to see price do this. You will see price move above the moving average, but that does not necessarily mean that price is now in an uptrend, because we need this to be broken out before price is in an uptrend, okay? Sometimes it will lag really, really bad. So that's why I'm saying you can use a 50 EMA if you do want to, because I found that in the past, before I just started to use price action, I found that the 50 EMA worked the best. And then you will see price start to do this. And when you see this, you can then assume kind of that price is in an uptrend. But I would like to, instead of seeing that, just see it continuously, see higher highs getting taken out and higher lows form, then you are in an uptrend. Same with this. If we came from this is the 50 EMA now, we came from let's say a bit of a consolidation. You can now start to see that price is now going down, and that's the way it is. That's why I say that when you trade in price action, is the best, because you don't have any lagging indicators on your chart. You don't have any of that, and you don't need any of that, because you know where price is going to when you anticipate, or when you see that price has formed a new lower low that's lower than this low that actually held the market up. Okay, so now let's go into some examples. Let me show you guys an uptrend. Let me show you guys a downtrend. Let me show you guys when price shifts trend. Okay, I'm just going to use this example. So what you can see here, this is the 4H chart on Euro JPY, and I want to tell you guys that price tends to have market structure on every time frame, so it doesn't matter which time frame you really trade. Okay, so you can see that here's the area in the market where price, I'm not going to look to the left, I'm just going to start right here where price has pushed down. Okay, you can see that price has made a level in the market. We then pulled back, we made another level in the market that's kind of equal lows. Okay, so we didn't necessarily make a lower low, we probably were in a consolidation here. So I will use this as a high. When we break out of this, we can see now that we made a high that is higher than this high. So this is a higher high, right? And this to me now, so this is, as I explained in the drawings at the top, that this was a point in the market where price just created, like price just created a point where we can anticipate if price breaks this, we then in an uptrend. That's all that you need to really know. So now you can see we have a high, then we have a higher high. We pull back to make now a higher low, and you consistently anticipating to trade with the trend because price has made a higher high. Now you are in an uptrend, you're anticipating to trade with this trend and just continue buys, guys. That's the importance of trading with the trend. We then make a new higher high right here. You can adjust this to there. Once price action breaks these highs, we then have a new higher high. So let me do this. We have a new higher high right there. We then form a new higher low, and we continue up to make this higher high because that higher high is higher than this higher high. And you continuously looking for buys because the trend is up, guys. So this is the way you find a trend. And let me show you guys what I'm talking about the EMA. So EMA. So if you can't determine the trend using price action the way I'm explaining now, you can always use a 50 EMA like this. And what you can see is that price broke above the EMA, but this does not necessarily mean that price is in an uptrend. Price is only in an uptrend once we take this out, okay? So that's very, very important. And then now you can see we make a higher high as I explained. So this line goes there, we make a higher low. You're continuously looking for buys, make a higher high, a higher low, a higher high, right? So this is an area in the market where price should not break below. And if price does break below that, you guys, if you don't know what I'm talking about, you guys can go check out the market structure video because it explains everything. If price does break below this area in the market, we are now looking for sells, guys. So this is the reason why I don't necessarily trust the EMA because, or even any moving average, because a lot of people will say when price is below the moving average, you're now looking for sells. But look at this, price was below the moving average, we then bounce. Your stop loss would have probably get taken out. So what I would say, use the moving average in confluence with market structure. You don't even need the moving average. If you don't need the moving average, you don't, you can take it off your chart. It's just cluttering up your chart. So you can take this off your chart because it is cluttering up your chart. Okay, so you know that when price breaks this, which it does here, that then confirms now that we are looking for sells. Okay, we are looking for sells. So you guys need to go watch the market structure video. So as long as we're below this now, we are looking for sells. We then have a pullback, we have a lower low, we've formed a new lower low now. So right there, this last lower high formed this last lower low. So we are continuously, even into next week, we're still going to be looking for sells to form a new lower low. And that right there is price expectation and trading with the trend, guys. So that I just showed you guys now an uptrend and a downtrend and how price changes a trend all on one pair. And I didn't actually expect this, which is brilliant. So thank you so much for watching until the end, guys. I do want to ask you guys, please like, subscribe so that the YouTube algorithms can start kicking out the information to more and more people that's actually watching this. Comment down below if this was useful. Comment below so if you use market structure, price action, or do you use moving averages to determine your trend. Okay, thank you so much for watching this video. Peace out.